Okay, story number 3. Beware of email fraud. My next story starts with an email that we received from a client of ours. This is a different client. Each of these are different client stories. We were the accounting department for this business. And again, this story I have to tell, I've seen this happen a few times, but here's the specifics on this story. So we were their accounting department, recurring services. We did their accounting every month, and we manage all their bill pay also. And we got this email that requested that we send a payment by wire to one of their vendors. It was a large amount. It was $1.4 million. And this amount was not out of the ordinary for this business. So that did not seem odd to us at all. The email that we received that had this request for payment had below the email where, you read the email you get, and then below it is the trail of conversations where people have hit reply over time. And you can read the previous conversations between other people at the company replying to each other and discussing the project that was related to this vendor. And we recognize those employee names. We know them. We ran their payroll. And so everything about it looked normal. We were even familiar with that project name that they were working on. We had made other payments related to that project. And in the email that we received, the vendor had attached the supporting documentation that was associated with this amount they were requesting. So everything seemed legitimate. Since it was a wire request and not a regular bill payment, the procedure is that all wires require written and verbal approval. So we called the person at our client who had requested the wire and sent us that email. We thought they requested the wire. We used the number that we have on file for them. No, we didn't use anything from that email. And we asked them to confirm the wire, and they knew nothing about this wire. They did not request this wire. So as we started looking into this, we found that the person, the criminal who had sent the email from an email address that was very similar to the company's email domain name. But they had added a second R, and you would not notice it. I mean, you really have to go looking for it. First of all, how many times do you get an email and then you go drill into the who it's from and read every letter in their email address? So the company felt really vulnerable. We felt vulnerable once we had discovered this. And even more disturbing was the fact that the criminal had tapped into the business's secure email account and had gotten a hold of actual email conversation, and they were able to jump in on it and forward it to us with the fraudulent wire payment request. So it had actual employee names and email addresses without the double R in the domain name. It was just the one email in the end asking for the money that had the double R in the name. So it really did look legitimate. So there you go. Story number 3 is beware of email fraud. Email fraud is referred to as BEC, business email compromise. Okay, guys, time for poll question number 2. Now that we've had story time, please look for the poll to pop up for you. And the poll question is, has your business or client's business been a victim of fraud?
All right, Laura, I went ahead and launched the second poll, which should be on everybody's screen right now. Now, if you're having trouble seeing it, please refresh your browser. And as Megan mentioned at the beginning, you're going to respond by clicking the radio button to the left of your answer choice. And don't forget to click submit. I'll leave this open for a little bit longer to allow everyone to get their responses in, but checking out the results is almost an even split. It looks like the most popular answer is no, but I know those who've been victims of fraud. That's about 40%. About 20% say it was attempted, but we were protected. Another 20% say no, we have these fraud prevention guards in place. Good job. And then the remaining, unfortunately, lost money. I'll go ahead and turn it back over to you, Laura.
Thank you so much. Okay, so now that story time is over, you've heard some stories from me. Sounds like many of you have heard other stories from other colleagues or had it happen to you yourself or your client. Let's look at what the statistics say. So one of our nation's professional bodies that watches this sort of information is the Association of Financial Professionals. They publish an annual report called the Payments Fraud and Control Survey. This report provides insights into these type of occurrences of payments fraud. And the 2024 report for this year reflects the data from 2023, from last year. So here are some of the highlights from this most recent report. This graph shows the percent of organizations that experience payments fraud for each year, starting on the far left, 2009, all the way to the far right, 2023, the most recent year we have data on. So look at the far right and then go one to the left, the second to last column. That's 2022. 65% of organizations were targets of attempted or actual payment fraud attacks. That's what I reported to you last year. It was the smallest percentage since 2014. It was very encouraging. I was stoked watching that go down every year. But now look at the far column. That's 2023. It's jumped back up, guys. So stay vigilant. 80% of organizations in 2023 experienced payment fraud. That's an increase of 15 percentage points from 2022. Unfortunately, payment fraud is back on the rise, and it's sort of getting up there to the record highs of, not sort of, it is back up there to the record highs of 2018 and 2019. That's a large percentage of companies that continue to be impacted by payments fraud. And furthermore, over half of these businesses were unsuccessful in recovering those funds that they lost. Here is a graph showing you the payment methods that are most affected by fraud activity. We've got checks at the top. Checks continue to be the payment method most impacted by fraud activity. We can see in the graph that check fraud is at 65%, up from the year before, 63%. So of the check on the graph here, the line for checks, you see green as the top one. That represents 2023 data. And then the navy blue one underneath it is 2022. So check fraud has increased. And it's no wonder, considering that checks continue to be the payment method most often used by organizations. 75% of respondents said that checks were being used at their organizations. However, many organizations are increasingly viewing paper checks as outdated methods of payment, and they are using fewer checks in their B2B transactions. They're trying to use digital methods instead. The volume of checks processed by the Federal Reserve declined 8% over the past 5 years. However, even despite these declining check volumes, the number of suspicious activity reports with the Federal Reserve have increased 40%. So check fraud is still rampant out there. Keep your eyes peeled for this, everyone. Common check fraud techniques are photocopying valid checks to deposit multiple times, creating fraudulent checks in chemical washes soaking stolen checks in chemical washes to remove the toner and replace it with a different payee name and amount. That's the story I told you about. And creating fraudulent checks with stolen bank account information. They just create it from scratch, the check, and then they fill it in for whatever dollar amount they like. Okay, the next one you'll see on the graph is ACH debits. Those are the next payment method most affected by fraud as of this most recent information on this report. ACH debit transactions are when funds are pulled from a specific bank account, such as when you set up like auto pay for your vendors, like your utility bills, telephone bill, things like that. When you go on auto pay, that's considered ACH debit. You're giving authorization to pull funds from your account. ACH debit fraud is up from 30% to 33%. This small increase could be connected to the uptick in the incidence of check fraud because fraudsters are creating ACH debits with stolen check information. Next, you'll see wire transfers there, still on the chart. Then this they're still affected by fraud. Wire transfer fraud has been declining bit by bit each year, from 48% back in 2017 to 31% in 2022. Now we're down to 24% in 2023. So I like to see that. This downward trend, I don't know, feels encouraging, that maybe the controls that companies are putting in place to prevent wire fraud are effective. I'd like to think that. But wire fraud activity is still high, considering it was only in the single digits until 2022. And now we're here at 24%. But it is on the decline, so I'll take it. Next, we have credit cards. This one clocks in at 20%, which is great news because it had recently jumped up 10 percentage points from 26% in 21 to 36% in 22. And now we're back down again to 20%. So that's good on the credit cards. A note about credit card fraud is, here's what you can look for. Card skimmers are when you insert your card and the information goes to someone else other than the store that you think you're paying. Also, fraudsters intercept mail. When you get new credit cards in the mail, fraudsters intercept that. So look for those. Try to get your mail quick and securely. And then, of course, online purchasing. When you buy something online in a web store, make sure it's a legit, secure private network. Be careful when you're purchasing things in places like public libraries or cafes or airports. Some fraudsters even get a job working at things like restaurants. And when you hand them your card to pay, they're taking your card information. All right. That one is a little bit scary. The next thing you know, you receive a notification from your financial institution that they suspect fraud. And so just make sure that you answer them and look at your purchase activity and help your bank identify whether it was fraud or not. The last one here is ACH credits. Those are also vulnerable to fraud. ACH credit is funds that are pushed to a specific bank account, such as like direct deposit payroll. The share of businesses that reported ACH credit fraud decreased from the prior year's 30%. So that's good to see. Okay, we've got another body, professional body in our country that is giving us information on fraud statistics. The ACFE is the Association of Certified Fraud Examiners, and they prepare this report to the nation every few years, dating back to 1996. So we don't get this report every year. The latest one that's been released is the 22 report, so 2022. That was their 12th edition. And this study, whereas the other one looked at fraud, this study is payments fraud. This study is looking at occupational fraud, meaning fraud committed by individuals against the organizations that they work for. Occupational fraud is among the costliest forms of financial crime in existence. The ACFE's report to the nations is a global study. It's the most comprehensive examination available of the costs, methods, victims, and perpetrators of occupational fraud. So this 22 study from 2022 contains an analysis of over 2,100 cases of occupational fraud from 133 countries, from 23 different industries, which caused a total loss of more than $3.6 billion, billion with a B. There are more than 3 billion people in the global workforce, and nearly all of them have access to or control over some portion of their employer's cash or assets. The vast majority of those 3 billion people will never abuse the trust that is placed in them by their employers. But the small percentage who do can cause enormous damage. This study looks at behavioral red flags that are commonly displayed by fraudsters. And when we can read this data, look at it every so often, and recognize these clues, it helps us more effectively detect fraud and minimize our loss. So this latest report to the nations finds that 39% of occupational fraudsters were people who were living beyond their means. And this has been the most common red flag in every study from this organization since 2008. The next most common red flag is coming in at 26% are those who are experiencing financial difficulties. So let's look at some more of the highlights from this latest report. Certified fraud examiners estimate that organizations lose 5% of revenue per year to fraud committed from inside the organization. The median loss per case is $117,000, meaning half of the cases are larger and half are smaller than this amount. The businesses with fewer than 100 employees suffered the highest median loss at $150,000. The two most common schemes that they see are asset misappropriation and financial statement fraud. So asset misappropriation schemes are the most common. This is when an employee improperly uses a company asset for personal use. Asset misappropriation made up 86% of the cases. This is the most common scheme of occupational fraud. But it is the least costly. The median loss for asset misappropriation is $100,000. Then we've got financial statement fraud schemes. These are the most costly, a little less common than asset misappropriation, but financial statement fraud is the most costly. This is when an employee intentionally causes a misstatement or omission of material information in the organization's financial reports, such as recording fictitious revenue, understating expenses, artificially inflating reported assets in order to deceive someone. So you can Google it and read about cases of it just so that you get familiar with things to look for. This is the least common, 9% of cases, but it is the most costly. The median loss on financial statement fraud is $593,000. A lack of internal controls contributed to nearly a third of the cases of occupational fraud. A typical occupational fraud case lasts 12 months before detection and causes a loss of $8,300 a month. The top 5 industries with the median losses for occupational fraud are real estate at $435,000 median fraud loss, wholesale trade at $400,000, transportation warehousing at $250,000, construction at $200,000, and utilities at $200,000. So if you're working with clients in those 5 industries, you'll for sure want to make sure you have tight controls on occupational fraud. Owners and executives of organizations committed only 23% of occupational frauds, but they caused the largest losses. Nearly half of all occupational frauds came from these 4 departments in an organization. Operations was the highest one at 15%, accounting department at 12%, executive upper management at 11%, and sales at 11%. Only 6% of perpetrators had a prior fraud conviction. Okay, so those are the numbers, those are the stats, those are the facts. Let's have another poll.
All right, you got it. Got that third poll open right now. Let us know if your firm's accounting tasks are performed by multiple people. You've got 4 options to choose from, and you guys know what to do. Go ahead and click that radio button and be sure to click submit so that your response counts for credit. I'll leave this open for a bit longer. And it looks like a little bit more of a split here so far of the people who are impacted by this or who this does apply to. We've got about 44% saying no single person has control over all parts. 19% say yes, but we could make improvements. And we've got 3% saying we plan to pick one vulnerable process and split it between staff today as soon as this webinar is over. Back over to you, Laura.
Thank you so much.